following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. As John up in Philadelphia is talking about silver here, I want to revisit it because it's an interesting situation. And we've actually got a gold system that actually just went long. So I want to kind of try to make some sense out of these two instruments. Here's the daily on silver. Let's just get right into it. And as we look at this, you know, we've had a little bit of a bounce action, if you can call it that, this morning, just a little bit of a bounce. And we got very, very close to these weekly unfair lows around 1559. We reached a low already of 1565. I'm going to call that satisfied. I mean, remember on these long-term time frames, you've got to give yourself a little bit of noise level. We talked about that a lot. You know, on the shorter term time frames, you can more than likely try to pin it to the tick a lot of times on some of the levels. But what we're looking at here is, you know, we don't have a divergence in Navigator, but we've got kind of an, you know, just a little bit of a change in momentum. And at the same time, we're at a major inflection point. Now, the good news is, on this type of scenario, we talked about waiting patiently until we either got above 1660, which is that kind of weekly breakout situation, or excuse me, daily breakout situation, or pull back into the next battle point area that was possible in my mind around 1559. Now, some people are saying, well, you know, what do you do in between? In my mind, you really don't do a lot in between. And that's just kind of the way I look at these things. I try to put forth some high risk reward scenarios and kind of letting the market come to you or break out. And there's a lot of areas where I would consider to be no man's land, and that was kind of the situation in silver. It just didn't feel like you had any leverage there. So the good news is it stops below 1560, let's call it, based on your appetite for risk. You know, it's a precarious situation. You're kind of down here on the lows again. Gold is, you know, at a major, you know, got to bounce or may actually have some trouble here. And silver's in a similar situation. But, you know, I'm a big fan of not going short either one of these instruments and trying to find support. And right now you've got some support on silver. So let's take a look at gold. After we've moved through silver, I want to just kind of paint the picture for gold here. And we, you know, had used this 1182, 1183 number before. We got a decent little move off of that. We never reached the ultimate targets that we were looking for around 1215. If you've got some momentum indicators you're looking at that may have given you a little bit of a reason, you know, while this thing was starting to roll over and kind of go back into the 1182 area, to get out and maybe try this again. But right now we've reached a low of 1183 this morning or last night for you. And this inflection point rounded off is 1183. So is that satisfied? Probably. Have we done a little bit of a bounce off of that? Would I like to see this get away from this area a lot quicker and faster? Yes, I would. So putting silver back into the picture, you know, you've got both of these metals at some relatively decent critical areas right now. And remember, you got to put stops in, because if these, you know, things start breaching some of these levels, a lot of folks will start covering, and, you know, there may be a little bit of a, you know, momentum move down for a while, and it may last for a couple of days. So there's no reason in my mind trying to, you know, weather those storms that could be pretty big. And gold may never come back. You always have to kind of take that attitude. I mean, gold was, you know, $300-$400 an ounce for decades, it seemed like, and you know, anything can happen. So is gold going to bounce? Our automated system is long, and we've got our stops in. That's kind of the way we're looking at gold, and I'm feeling, you know, in a very similar state about silver right now. So that's the situation. If I drag that out any longer, I'll probably be in the Guinness Book of World Records. So thanks for bearing with me on that. Let's take a look at we got to look at the euro and the dollar situation because it had a little bit of a reversal this today already. And I want to see here. Okay. We were kind of on with Demantis yesterday, who's very euro bearish. Doesn't want the euro to go up. We talked about 107.02, this 107 area. We've kind of gotten back above. We haven't closed below it. We talked about getting a close below it. That hasn't happened. Should you turn into a long player of the euro right now? I don't think so. I think you just got to keep playing the same game below 107 and hope we get a close on that scene. This is the weekly. Again, nothing to write home about when the euro is kind of bouncing, but here's the 240. I wouldn't pay attention to that. The longer term view on the euro is you might be able to pick up 700 or 800 pips here, and you might get stopped out a couple of times along the way, but that's trading. Lose a little, lose a little, lose a little, make a lot. Let's take a look at the yen. This is something we talked about, with their so-called outstanding numbers that they came out with. We talked yesterday about not getting sucked into something like that, and we had kind of come off of these inflection points around. We talked about, again, not being short the yen in any circumstance, looking for the support areas and looking for the breakout areas. Well, everyone knows seemingly that the Japanese are more than likely going to come out with bad numbers again the next month. The government's behind this particular trade. That's also something you got to keep in mind. We've talked about that a lot, and boring is good. This is something that you just try to find support areas and breakout areas and just keep turning the wrench the same way on the yen. So, what do you do with it now? I think you just, I think you hang on to it, and I think you put your stops in now below 1969, and you look towards these 240s as you trail up, and I think we're going to just continue to trail up here. I think you look at this as the regulation of this trade up. Now, remember the initial stops, you got to just pay attention to those daily and fair highs. But as these 240s form more boxes, I think that's kind of the way you trade this. Okay. All right. So when we looked at, obviously wake up in the morning, I turn on Bloomberg. And the morning for me is probably dinner time for you. And Bloomberg is playing, the script out of Hong Kong. And it was, this ruined my whole Asia scene, is when Susan Lee went to CNBC, and now I think she's on the day there. And I wake up in the morning, I don't get to see Susan Lee on Bloomberg. So that's a huge loss, but we're going to get through it together. So as we look at the Japanese markets, and I wake up and look at these, Shanghai's of the world, again, this is, I sound like a broken record, but Tom was, kind of alerting me the other day. I think it was last Thursday, I want to say, maybe last Friday, that, some of the ETFs related to the Shanghai, I think it was on Friday, we're starting to turn south. And I told him, I said, look, I don't care what's going on. These people are nuts over here. They're going to keep buying this index. We've had a double in it, and we're just continuing to make new highs all the time. I hear you, Terry. I may need counseling. She's gone. Oh, why? Don't ask me to sing. Here we go. So let's take a look at the Hang Seng. We're going to look at the Nikkei because the Nikkei, a little bit of a pullback close to close, but again, these things are super strong. If you can find the ETFs on these particular, they're related heavily, like Joey was kind of alluding to, on the U.S. market, related to some of these Asian markets. You want to always, as a trader, you want to trade things that are in play and things that you have leverage with. Now, the Nikkei's coming back into now, and let me just see where we're at. Hold on. E-signal's sometimes a little bit off here. I get my screen over here. Well, all right. I seem to be handicapped right now. Let me get this over. There we go. Right now, 2170. These are real-time quotes I've got on this e-signal. So as we look at this daily, now the Nikkei's coming back after the power up. I think we're missing a bar there, but right now we're sitting at unfair highs around 21.25, and we've reached a low today already of 21.30. So I'm going to call that satisfied. Now, this is your initial support on the Nikkei, right? So the good news is you can orient stops below there, and any technical damage on the large scale will happen below 20,000. But I just don't think that's probably in order at this state. And it looks like the yen's continuing to get devalued, which is not going to hurt the case for the Nikkei to go higher. Okay, DAX. We got to go into the madness here. We talked about this, bearish situation with this new box appearing above on the dailies, and this has had some follow through. Obviously, it doesn't like a euro that's kind of reversing here a little bit. So, where's this DAX headed ultimately? I think you just again look to the 240s. Very similar to the gold action right now on a short-term scale. You want to see these things get away from these inflection points. And gold is a little concerning right now, even though the system's long, because, again, you want to see prices just get the heck away from these inflection points. And it's almost doing like a kind of a sympathy bounce right now. And the DAX may continue to cave in because it doesn't seem to want to be away from these short-term inflection points at 11.711 right now. All right, let's move on and let's cover a couple more usual suspects, and then we're going to get into the individual earnings stock related scene in just a little bit here. We're going to take a look at copper again. Somebody put this on my radar screen the other day, and I'm kind of interested in this trade now. I don't trade copper a lot, but we had a little bit of volatility around this inflection point. I'm still a big fan that this is not a bad situation to be in on the long side, with stops based on your appetite for risk below that 2068 area. So that's the situation on copper. We took a look, let's see, the other day at coffee, and we talked about it while we were coming into these dual inflection points around 133.13. I want to show you this just to talk about some hard commodities for a little bit. 133.13, we just talked about possibly reaching targets of 146.27 this week, and we've reached a high this week of 145 and some change. So nice little trade, 13-point move in coffee, and we got a little help from the dual inflection points lining up on coffee down here in that 133.13, 133.36, and we got that pullback, and we have just had a nice little run. So we'll be right back in just a little bit, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, welcome back to the show. We're looking at Facebook right now, and a little bit of volatility after their earnings. And this is another reason not to trade before the earnings, because you put your stops in and it seems like wherever you put them in, they gun for them and then maybe even reverse it. So right now, if you try to put a bid out there on the daily for lows, let's just take a look at this 81.93. You still, we went down into 81 even. This is not reflecting that. This is eSignal's daily charts, not really getting into the today's action yet. So, you'll see that daily bar look like that. But this is, just another reason. And now we're kind of back to the middle ground here. So just pulling up our 240s, yesterday's close, we're kind of back there, and we had a 4 or 5 point pre-market range. Thanks for that, Terry. And Mark Zuckerberg is safe again. I don't know if that movie was totally true, but and then he runs to Singapore and renounces his citizenship to the U.S. I mean, damn guy's a fair weather fan, just don't have any respect for him. That's my take on him. Anyway, here we go. Man, did your computer ever shock you? That was weird. All right. NASDAQ, let's take a look at the S&Ps here. This is a tough one. We've been talking about, this is our 240s. We had a little bit of an action this morning, pulling back below the 290 area, and just can't seem to have any follow through. And, what does that mean? I'm going to go into, this is a newer version of the scanner. I'm sorry, I had this beta version up. Let me just go down into looking at the S&Ps, and we see on our long-term and intermediate and short-term 240s, we see those congruent now. But the daily's just barely hanging in. I mean, you don't have a deep conviction for these longs. And I'm just, again, I don't think the leverage is there to go long, so I'm just kind of waiting for more of a short signal. And, there's much better ways to put money to work than to buy S&Ps right now. And I think, once that starts hitting home, and these earnings and the dollar-related multinational type ramifications come in, I don't think this thing's going anywhere. So we're going to take a look at a couple other stocks that have earnings-related situations right now. PG, Procter & Gamble. Again, this particular stock, I want to pull up the prices because these signals not updated out right now, is pulled back to 80 so far. So what's happening with PG is it was a relatively weak stock in a market that kept kind of floating up, and this was one that the scanner was kind of indicating that was in that vein of what we just talked about. And now we're trading down in the 80 area, so we're below weeklies now, showing its hand as a relatively weak stock. And this is the type of stock we're below dailies without question. So we're down in here. We've cleared a lot of congestion. So now you're looking for retracements back up to sell on this particular stock. And you're also hoping that some of these S&Ps, or excuse me, some of the indices, I'm sorry, I'm thinking about a million things right now, are going to, U.S. related indices are going to pull back to hopefully drag this down even farther. But right now, you can't sell things in a hole. And you got retracement areas in the, if you're lucky, back up into 82, and maybe a new 240 box unfair high you might be able to clip here. But what's going to happen is you're going to be able to go into the scanner. You're going to be able to click on you're not going to be able to click on that. I am. And you're going to be able to find Procter & Gamble in this list. And I should use the function. There's Procter & Gamble. And you're going to be able to see these new inflection points when they happen. So go back to my exchanges. And what we're doing here, if you missed yesterday's show, this is kind of a test module. We're just kind of farting around with this right now. We're going to show the sectors within the major U.S. indices and the heat map, and we're also going to get rid of these paragraphs. We're just going to have a tab up there where you're going to be able to see the breadth as these sectors are highlighted strong or weak relative to each other as far as most of the major ETFs. We're going to come back and look at Caterpillar. It was on my radar screen earlier. Stay tuned, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Tell Susan Lee I called again. Thanks. Just kidding, guys. All right, Caterpillar. Well, let's take a look at this. Is a really, really good reason, another good reason why you don't trade before earnings announcements. And if you think that, fundamentally speaking, that, okay, multinational dollar causing them a lot of problems, lo and behold, here's the 60-minute. Peak to valley, valley to peak, that's going to be that's about an 8% move on an earnings announcement. That's incredible. All right, so we're looking at 88 right now pre-market. So again, this might be another good reason not to trade fundamentals before an earnings announcement. That was a joke about Susan Lee. Hope nobody's calling the police. So as we look at Caterpillar, we're going to move into 3M. I hear sirens too. I hear sirens a lot, Al. Anyway, 3M got a little bit of unsettling for the stock crowd here following 3M. So let's just take a look at this 160 pre-market. This one really had no, this was just blah, 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 blah for the last couple of months within the fair auction after we climbed pretty high. And right now, 160 pre-markets. Let's just take a look at the dailies. This would have been one I wouldn't even have looked at. You really didn't have any leverage, and any kind of moves around these profiles were still within our weekly profiles, even with this move down. So there's not a lot of things going on with 3M as far as an actionable idea. Let's take a look at Altera. ALTR. we're going to take a look at Altera. This is another one with some earnings out. And let me just make sure that we are. Let's see, Altera. Here we go. This is after the market closed, but I wanted to pull this up because of one reason. Got an orange bar appearing here. You've also, and this is on our long-term weekly, we've had a good kind of move up. This is kind of a continuation type pattern, but the cool thing is, and the reason I'm kind of bringing this as a kind of a hardcore example is this one, you're going to possibly be able to get some new inflection points appearing during these announcements on the weekly. I'm sorry, today's Thursday. That's not true. We're going to have to wait until Friday's closed, but this is an indication that in a natural kind of way, the technicals are really predicting a new supply area up top. And that means that, the earnings can do anything, but we're more than likely going to get some things to play off of by Monday morning here. So don't get too attached to the fundamentals before this announcement. Also, Big Mo, Altria Group before the market. I don't know if they've announced yet. Maybe somebody can tell me in the den. Nobody's listening or cares to tell. Okay. I get that picture. I think we're trading 51.35. All right. So that being said, we've obviously, so 51.35, that's a real print. So we've obviously gotten back down below the daily profiles here. This has not been a strong stock in a relatively strong market. Here's the weekly situation. So in my opinion, you've got a leverage point here on the short side. If we can kind of bounce around here, depends on what the market's going to do, give it a little help or not, back up into 51.58, that would be a selling point for Altria. And why is that? Because we were kind of, not the strongest stock in a strong market, and it's actually showing its hand, and you may be able to take advantage of something like that. I'm going to take a look at this. ETFC. E-Trade Financial. All right. You remember when these guys were given, it was just mind-boggling how popular this company got back in the NASDAQ super run that happened in the late 90s. They gave you a free computer. If they'd send you a free computer from E-Trade if you open an account with them. That's how much money they knew they were going to make just if you opened an account. And here's the E-Trade right now. So 28.27, they're coming out after the close. This is a stock that, kind of has been forgotten about for a long time. And the brokerage business as a whole, and if you listen to Joey when he was on a couple of weeks ago, you kind of got a full 411 download on that. There's nothing there. I mean, they have commoditized the heck out of this process, and E-Trade seemingly has been able to kind of, plow through some of that mud and continue to generate alpha in the stock at least. So 28.61 trading pre-market 28.60. So what do you do with this? Waiting for the announcements, and here's the weekly situation. I think any type of good news that's going to cause this to break above, and this is the reason I'm bringing it up, 28.65. This stock may run for a while because there may be quite a few people covering. This is not the type of household name that, this is an instrument that people are actually shorting right now. So any type of good news may cause this to kind of do one of these moonshots, and you may be able to get a free ride for a while as a day trader. Okay. Let's take a look at the NASDAQ, some of the inflection points here. We talked about this recently as far as yesterday, kind of, sitting on the launching pad up here. As far as, the stronger now, again, of the S&Ps than the NASDAQ, do I think you've got a lot of deep conviction to go long here? No, on the fundamental side, and on the breadth side, on the technicals, no. But, you can't ignore that we're kind of sitting up here and may actually just kind of cross some of these borders just to do it, to hurt some shorts. So, be aware of that. We've had a a big power move up since we pulled back into these 43, 44s a couple of days ago. Be aware of that. And here's the short-term inflection points on the NASDAQ. Computer's getting slow here. Okay. Nothing really to pay attention to. I think you don't short this right now. There's nothing to really, lean on to right now as far as inflection points on the long term. Let's take a look at DPS. Dr. Pepper Snapple. I don't know if this is a good print or not. 78.81. Is that right? I don't have a lot of data here on DPS pre-market. This has been one that's kind of been on my radar screen, and we've looked at this actually in the past couple of weeks. Scanner picks it out, strong stock, profile well below, and on the dailies, you're staying within the fair auction, kind of winding, pull back into that inflection point while we're in the fair auction on the weekly, and pull back to this intermediate around 76.56. Didn't want to be there. This is the type of move you really like to see. Doesn't want to be at that inflection point. Powers up, earnings pre-market. Have to wait and see. And these are the major inflection points to pay attention to: 79, or let's just call it 80, and 76.56. I'm supposed to do this every day. I'm just remembering to do it, and Al's going to kill me. The numbers to call into the show are 877-927-6648 and internationally 727-445-1044. Would love to hear from you if you got anything on your mind or comments that or stocks and individual stocks that you want to get analyzed, futures or currencies. All right. We're going to take a look at Tesla really quick. Now, we were looking at this the other day, and the reason I'm pulling it up is because this thing obviously has done a moonshot here. And let's go back to our situation on our 240. So we're back into the 220 range almost. We're trading 217, 218 pre-market. So this is the situation on Tesla. We had those weeklies at 210 that we had to get across, and the dailies at 213. Those have both been breached. Price is continuing to hang above those levels, and now that little DMZ is going to be your support area that you hope this thing pulls back to maybe try to glean some more longs off of. And you've also got 213 as a new box here appearing below. Remember, boxes that appear below price action, that's usually very, very bullish. So you might not get a chance for this to pull back to buy. And if that's the case, if it's going to churn up here for a while, it's like Joey in the Shanghai. You might have to chase this thing for a little bit. You can take a look at Amazon because this has kind of been on the scanner lately. Gotten to these inflection points up top, and I'm pulling up stocks that are kind of showing some strength right now. We were kind of looking at stocks that weren't showing a lot of strength before, but that's kind of how the show flows. We're just going to look at some weak stocks, some strong stocks, just to put some things in your head. This one obviously is sitting seemingly on the launching pad and crossing some borders above, and Amazon's also after the close. I was trying to find it on the list here to see if it was pre-market or after the close. Is it after the close? Yes, after the close. So, a lot of people are looking at this right now. They're looking at it as, they may have to chase this. This is the type of stock you definitely want to wait till after the earnings. This thing can be all over the place. There's a lot at stake when the stock announces earnings. So any blips in numbers on the good side or bad side are going to send somebody through the roof. Okay. We're going to now take a look at cocoa. And we looked at this the other day. Okay. we talked about it this week, and it will stay below some of the inflection points, 28.34. Cocoa also now below the dailies. This new box appearing above, and then we're getting below there. So the inflection points to pay attention to: 27.79 on the daily, and then 28.34. That DMZ. Any breakouts above there? Excuse me. Any retracements up into that area are going to need to be sold on cocoa. I figure out who's trying to get hold of me here. Okay. We're going to take a look at 3D Systems Corp. Now, this was one that, we had met some targets above. I'm going to try to blow this up here. This is another one Joey was kind of pounding the table on. Let me see if I can get it in perspective here. Yeah, see, we started migrating above here, but on a long-term basis, this is a really good primer here on this 3D Systems Corp, the 3D printing situation, 32.32. We wanted a weekly, we said religiously, I believe, we wanted a weekly close above there to really consider that the long-term trend had been broken. Now we're coming back into the $30 range from that 33 area. And we had said, oh, jeez. Okay, so we had said that we really like to see some new inflection points appear. We got those above, but we said to really confirm this, we're going to have a weekly close. And new boxes had appeared. We talked about putting stops initially on the stingy side below 31.93, and that's kind of how this works as far as the move happens. You're looking for reasons to take profits or try to protect profits. This was that kind of protect profit situation below 32 that we talked about. Now you don't have any leverage down here. You're within the weekly profile, you're within the daily profile, and you're just going to have to sit tight now. And if you're not out of the trade from the long side, the next stop down on the pullback, could be back down into the 28 area. So it's a stock that on the long term is still in that trending down situation that hadn't had any technical reasons to damage that trend down. All right, we're going to take a look at two ETFs that we usually look at. XLF kind of bounced up a little bit here, but I'm still a big fan of putting stops above 25.50. There's enough said on that. Let's take a look at the XLE. This has been kind of the darling to really trade rather than crude oil, and it's still kind of proven itself again. 80.87 coming off those inflection points 2 days in a row. Lows of 81.01 previous day, and today 81.02. 80.87 getting into that neighborhood, not wanting to be there. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on the Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I'm going to pull up Kimco Realty Corp in the scanner bottom, if you can see that. Just looking for stocks that might be in play here. KIM. And let's see here, KIM. Here we go. Do a little instant analysis on this one. And ouch. Yeah. Woo. All right. So we know what the deal is on the intermediate. And, is this a buy? Is it coming down to dual inflection points and looking real rosy? No, this is, last week we hit these things. We did a little kind of sympathy bounce off inflection points here off double bottoms. We are coming back down into those inflection points and breaching them. KIM may do a flush here, even though it's down. I mean, I know we kind of trailed down since 28 recently because of this action right here, and because we're sitting on the lows. 25.17 pre-market, that's real. I think you put your stops above those weekly and daily unfair lows, and see what you can wring out of this the rest of the way down. This is not looking good here, and the market coming down could really just pulverize this thing if the market does come down. Off the scanner, also, I'm looking at Macy's. I want to pull that up. M, orange. Pull up the paragraph on it. Caution the longs, blah, blah, blah. You can read that for yourself. Let's see here. I'm sorry, I typed in the wrong symbol. Hold on 2 seconds. M, not MC. What was I thinking about? Here we go. All right, so, this is, just by first look at this, This week's been kind of a consolidation situation here, but we're consolidating at the right price. And pre-market we're trading 67. So what we want to do here is look at the dailies. This is kind of a clear signal to me that, stepping back and looking at this from a little bit higher view, you get daily closes now that we've kind of pulled back into those weekly unfair highs. We've consolidated for a while. These unfair highs around 70. We get a daily close above 70. I think this thing could run up again. Excuse me, not 70. What am I talking about? Daily close above 67. I think we could run back up into 70 on Macy's. Keep that on your radar screen. I wouldn't do anything until we got a close above 67, 67.17 to be exact. And you can put your stops below 66.5 on Macy's. That came right from the scanner, and I would have never looked at it otherwise. Michael Kors, what a joke. KORS, let's look at that one. That seemingly is always on the screen here. Yeah, I mean, read about this company. Fundamentally speaking, it's got issues, but technically speaking, it's got more issues. So 63.54, we've kind of already kind of leveraged off of that once. We're looking for new inflection points. We're not looking to buy this. It's not on sale. This trend could continue down. This is the thing that could come down into the 20s easily. Not saying it's going to go there immediately. Make sure you put your stops in. But this dog has fleas. Let's take a look at the scanner again. All right, just a couple other choice picks here. Mosaic, we talked about that. MOS still on the radar screen. Pitney Bowes looking ugly as always. PCG. Here we go. Powell Corp, PLL. That one's looking very ugly. POM, Potomac Electric Power Company. Guys, stay tuned. Basil's got an awesome webinar teed up. Go to the homepage, look for that. You'll completely enjoy it. And Steve Rhodes is next.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.